Hello, everybody. Welcome to another edition of the 1Million by 1Million podcast. 1M by 1M, as you know, is the first and only global virtual accelerator in the world, and our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. Today, I'm here with Frank Malek from Impacteo. Frank, welcome to the show. Great to have you here.
Thank you, Samara. It's a pleasure to be here.
Frank, let's start by introducing our audience to you and to Impacteo. Tell us about your background and what is the investment thesis of Impacteo.
Well, great. Hello, everyone. I was raised and grew up in Silicon Valley, so I was a geek and turned executive. Worked at some of the large companies. I was a early employee at Cisco Systems, and became an entrepreneur and investor over the years. And currently, I have a small fund with a partner, my partner Damian, and it's called Impacteo. We are an impact-oriented, technology-based, early-stage investors, and our mission is to back entrepreneurs or socialpreneurs in both Europe and North America who want to transform society by using technology to solve some of the world's toughest problems that we're all seeing today around education, health, and environment.
So tell us a bit about fund size, what check size, focus of the fund in terms of when you talk about impact investment, what kinds of stuff are you looking for?
Right. I'll be more than happy to. So really, impact investment for the folks on the call, what it means is that we require a financial return, but only from companies which can generate measurable, beneficial social and environmental impact. And so, usually we don't like to lead. Although we do lead at times, but usually we like to follow institutional investors, and we write checks anywhere between 50 and 500K, and we like to follow, especially in round A. So some of the deals that we are investing in today and that I'm looking for, just to give you some examples, would be anything around healthcare. For example, if we can have if you can raise meat without the animals, we're interested in that. We're interested in education for children with autism, using blockchain banking for the bankless. For example, we're looking at a technology right now that finds leaks underground. Water is it's going to become a very scarce resource for us. And so, we're looking at next generation disease diagnostics, matching fashion designers with ethical factories globally. So we're looking for things like that. And one of the areas that we're really interested in today is around climate change. As you know, the severity of the frequency of climate catastrophe and also the intensity of them have increased, and there's a lot of a large part of our society that get impacted by that, and there's a gap there. So those are the kind of things we're looking at today and we're interested in.
Okay. So one obvious question based on what you just said is, since you follow, there must be a group of investors that you work with who have a similar investment thesis to yours and who are interested in leading. Who are those funds that you tend to collaborate with around a similar investment thesis?
Yeah, no, this is great. We actually, we have relationships at three levels. We have industrial relationships today, and I won't give you an exhaustive list, but, the Googles, the Amazons, the Facebook, Cisco's, Airbnbs of the world. We have venture capital relationships. My partner and I, have both been entrepreneurs, have raised money, have had exits, been investors, and so we have relationships with top tier venture capitalists and investors both in Europe and in the U.S. I have co-invested with Sequoia, with DFJ, with DCM, Mayfield, Partech, just to give you a sampling. And then also, I think it's really important to, as a seed investor or early stage investor, to also have a relationship with the incubators and accelerators and business angels, which we do again across Europe, Asia, and the U.S.
So let's say we send you a company, you will figure out from your network who is a likely investor that you want to do the deal with, and have them price the deal and lead the deal. Is that what you're saying?
Yeah, yes, we prefer that. That's right.
Okay, fair enough. Now, you said you invest all over Europe and North America. Is that an accurate observation?
That's true. That's true, yes.
Okay.
We just made, just to give you an example, recently made two investments in Europe, one in South America, in Brazil, which we'll announce in the coming weeks, and looking at and doing one here in the Bay Area, where we're doing our due diligence. I think at some point you'll probably ask me about, why are we investing outside of the Valley and have presence. I think, a big part of that, if you talk to other angel investors, you'll see that, there's probably more dollars going to fewer deals. So the bar is really much higher now for seed companies than ever before. And, the seed deals look like A's, and the B's and, look like C's and so on. So, it's been really, I think the valuations that we're seeing are really too frothy, I think, here in what we're seeing in the Valley and in the U.S.
In the mainstream deals, yes, absolutely right. In the mainstream deals. There's still lots of stuff going on outside of the mainstream unicorn chasing business. There's, for example, if you're willing to do smaller investments with early exit strategies, then there's a whole pool of companies out there that are okay that the unicorn chasers are not going to touch, but that's a market where we are seeing some investors position themselves. Is that something that you do?
Well, yeah. Look, I think what you're talking about is, do we look at sort of, smaller deals? We're interested in smaller deals, but we're not interested in what I call lifestyle businesses. We're investing to get exits. We're going to invest in, really top, for us.
Smaller deals doesn't mean lifestyle, right? Smaller deals means that's low TAM necessarily. If you don't have $1 billion TAM, the unicorn chasers are not going to touch you, but the corporates acquire companies all the time that don't require $1 billion TAM.
No, absolutely. No. We are not looking for home runs. Although we've had both a unicorn and an IPO recently. We're really happy about that. But no, we're not looking for those. We're quite happy with, if I may use the baseball terminology, we're happy with a lot of singles, doubles, and triples.
Yeah. Okay.
Absolutely. I think it's quite unrealistic to base your fund on those unicorns. Obviously, we don't have a big fund, so we from an economic perspective, we don't have to bring unicorns to make sense for the size of the fund. So
how big is your fund, by the way?
It's less than $50 million, but again, we are. We invest again quite carefully, and really try to work with teams that we've invested in before, we know, and also new investors. We're looking for again in Europe. One thing that we found out is there's quite a bit of talent here, and there's a lot of great ideas. Now, the mindset may be a little bit different than some of the entrepreneurs that we find here in the Valley, but there's just a great amount of opportunity and talent that we're seeing, in other markets. And so, so our fund is about $40 million fund.
Okay.
It's a first-time fund, and we are hoping to be able to close, a follow-up fund later this year.
Okay, very good. We have a lot of activity right now in Europe, actually. We just announced last fall a partnership with EIT Health, European Institute of Innovation and Technology, and their digital health parts. So these are all healthcare IT companies, so that's probably aligns with your investment thesis.
Yeah.
Okay. How about a few examples of deals that you have invested in, and a little bit of a commentary on what is it in those deals that spoke to you? What stage did you encounter them? How did you encounter them? And why did they speak to you?
Well, let me just start with the trends that I think we're seeing, if that's okay. And because we are looking for trends, and where we see opportunity. And I think obviously, as I mentioned earlier, we love healthcare. Have had several exits around healthcare, but I think the trends we're seeing right now is a lot around AI, and machine learning. And for example, we like where those technologies can be applied to healthcare, to the aging population. For example, also to improve customer engagement or workflow automation around clinical trials. So we like some of the technology that's coming around machine learning and AI and how it's being applied to healthcare, to genomics. So when I invested, so I'll use Guardant Health as an example. Guardant Health is they're a leading precision oncology company, and what they do is they help conquer cancer through proprietary blood tests, vast data sets, and advanced analytics. And what I loved about this was one, I do have family members that are are dealing with cancer, so from a personal level, I was resonating to this. Plus, the team that was working on this is really a top-notch team. I've invested in them in the past. They've had an exit with them, and they really know this space and had great IP. I thought they had a great mission. They had a great team and great set of investors. And so this is a company that I invested in 2013. Recently they went IPO. So I love the mission and I love the team of what they're doing. Another company that again I'm really interested in, and and you'll see a common thread here. It's all about I think data is becoming very pervasive in how we build these companies and solutions. And another company that I'm really interested in, it's around climate change. As I mentioned earlier, it's called Global Parametrics, and what they do is they supply geophysical data to create financial products. So they provide much needed information and financial tools so communities can respond and recover quickly in the face of disasters. And so they provide the big data technology, the climate technology, and also some of the financial tools to again help these communities that are underserved to get back on their feet again. Again, I guess the trends that we're seeing in our investing is how do you bring machine learning, AI, blockchain to solving some of these areas that we're focused on around education, the environment, and healthcare.
Okay, very good. Are you chasing unicorns, or are you doing smaller deals?
Look, Yeah, no, we're not chasing unicorns.
So we are consistent with the original discussion we had around smaller exits. That's fine.
Yes. No, we're
because
not.
You mentioned all these companies like Sequoia and co-investing with companies like Sequoia and so forth. They are all chasing unicorns. So I'm just double checking on.
Yeah, no. I mean, they have to, but for example, in Garden Health, we were the early, we were the seed investor. Sequoia came in round A, and Khosla and Lightspeed and all the other guys. So we invested because we believed in what the company was doing, and we believed in the team, right? And so no, we're not. It's not a criteria for us. Again, we are an impact fund. We are looking for both, social impact and financial returns, because we understand in order for you to have continued impact, you have to be sustainable. And so, we're bringing really the VC discipline to impact investing. And I think what's really important for people to understand why we think this is an upcoming trend is when you look at millennials, right? Not our generation, but millennials. They actually do care about, where they work, the products that they purchase, and consumers who prefer to work with a sustainable company. If you look at data, 49% of millennials versus 13% of baby boomers. So, there's several trends we're seeing here. We're seeing trends of more of today's population caring more about sustainable, impactful investments, and then secondly, the emergence of this really amazing technology that allows us to underpin, a lot of these solutions and products that we're building.
Great. All right. I think I understand what you're doing, and I will send you at least a company to start discussions with. Thank you for participating in the podcast today and sharing your investment thesis. Audience, thank you for listening, and I hope you're going to show up at one of these public roundtables where you can discuss your strategy and get input from me as well as from other guests who are at those sessions, mentoring sessions. The free mentoring sessions have been happening since 2008. We have done 430 of these, so please show up and take advantage of it. And I will be back again with another round of the 1 Million by 1 Million podcast.